Good morning and welcome to Frontier Opening Bell. It's the first Monday of the week and, of course, the first trading day. We're getting started here on Frontier Africa Reports. I am Busin Omofaye and, of course, Joshua Debisi, the head of banking research and analysis at Vector Capital Management, is here, and a member of the Frontier Africa team, Faith Agbetuya. Good morning, everyone. Let's look at the market very closely. The Nigerian market managed to eke out 0.06% on a weekly basis. The BRVM was also better but bigger by 33 basis points. The Egyptian market fell nearly 1% on Sunday, which is the start of the week for the North African largest equities bourse. The Nairobi market was bigger by 1.24% on Friday, and the Johannesburg Stock Exchange, the GSC, was down by nearly 0.75% on Friday. That's just a summary of how we finished off last week. Take it up all on the East African markets just to get a few more some news into the box this morning with the central bank raft of meetings. We expect that this week. Egypt will had its meeting last week. South Africa is what we expect this week. One of the banking group in Kenya, the NCBA, reporting half-year net profit of about 76.9%. That comes to about 4.6 billion shillings. Kenya's national debt is about 7.71 trillion shillings in the month of June. The central bank governor last week spoke about the level of unsustainability and that Kenya may default if the level of borrowing by the Kenyatta's administration continues. Tanzania cuts its growth forecast from 5.6% previous to 4%. And Rwanda says it lost $14 million to corrupt deals. That sounds a bit strange, or is it familiar, Joshua?
Well, I mean, familiar, unfortunately, but the fact that this is Rwanda reporting this, you have to say that it's a little bit of a surprise, just because I mean, the way Kagame has gone about sort of reshaping the image of that country has been quite impressive. But I mean, unfortunately, Africa still struggles with a lot of corruption, institutional corruption to a large extent. But I'd say that $14 million is nothing compared to the level of losses we've seen in Nigeria over the past decade, at least, going all the way back to 1999 and even before that into the military regimes. I'd say that we've lost, hundreds of billions of dollars to corruption in that amount of time. But in just recent memory, you can say that obviously due to when we had high oil crude prices, there was quite a lot of theft, quite a lot of corruption around that market back then when we had crude prices above $100 per barrel. So it's really not surprising. In the case of Rwanda, just due to the fact that they don't have the same level of natural resources that we do, you can say maybe they've been spared the worst of the African corrupt tendencies. Let's say.
Very, very interesting picture you paint there. Again, the size of the country, a very small country, Rwanda is. And like you said, resources are a little bit agriculture, mainly a few mining and things like that. So, largely speaking, you can't steal what doesn't exist, by the way. So, that's it. Maybe we have more resources in Nigeria, then it's got a whole lot more of grand corrupt practices both the public and the private sector level. Let's touch on to West Africa because Nigeria is suspected, the Debt Management Office is suspected to continue the investors' roadshow, virtually speaking, and the pricing of his Eurobonds tomorrow between $3 billion and $6 billion. The news came over the weekend that President Buhari has asked the Ministry of Finance to incorporate the NNPC Limited with a new board of directors. The analysts and others will be swarming over that piece of news from today. Looking at the new board of directors, will they be able to ensure good corporate governance and accountability and transparency in the new NNPC, which is taking a new horizon after 4 decades of existence as a government parastatal? And CAP PLC has finally listed 88.25 million shares after its business combination with Portland Paints PLC. Now, the Portland Paints is being delisted from the NGX. And CAP PLC, which was the base, is the emerging company, and that was part of the agreement that was in the papers over the M&A between the two companies. The surviving entity is CAP PLC, and this is the exit. of Portland Pates PLC on the Nigerian market. AbokiFX.com stopped its FX rates publications after those very hot allegations from the central bank last Friday on black market rates, or what they call parallel market. Ghana signed $1.2 billion deal to develop its bauxite sector. Everybody's getting on the ground. Ghana is known for gold and a few other resources, but now it's adding bauxite to that and looking at further investment of about 1.2 billion US dollars. The Africa Investment Forum for this year will hold in Abidjan. The EFDB is putting that in his at the back of his office to start after the pandemic that prevented that from taking place last year, December uh, 1 to 3. Quickly, Joshua, let's start with the NNPC Incorporated with you. Then I get Fitch to speak to me briefly to the abokiFX.com.
All right. So obviously, this is a very encouraging sign, because we've been crying out obviously for a restructuring of the state's oil firm for various reasons. Number one, obviously, being transparency. There's been quite a lot of opaque practices going on at the NNPC for the last 4 decades, really, and for a very long time it was seen as just a money making enterprise for the few that had the opportunity or were chanced to be associated with or employed by the company. Obviously, that should change with them becoming a public limited liability company, and the hope is that eventually they will be listed on the Nigerian Stock Exchange, which I think is the most exciting part of this whole thing. Just to be able to, on a regular basis, observe and keep track of their activities, keep track of what is going on within the Nigerian oil sector, it will really shed a lot of light on what state we're in currently. I wish this had happened, 10 years ago, because then probably we'd be in a much better fiscal situation as a country. But, better late than never. Now, the truth is, I've looked at the board. I think the board is a little bit light just because I think, you know, I think, hiring one board member from each geopolitical zone is not really enough. I think a board for the company the size of the NNPC should be at least twice the size and should have a very diverse cast of people with a lot of strong expertise in the oil and gas business. So I think that the board can, they can still do a lot better with the current board as it has been announced. But overall, it's still a very encouraging start. Hopefully, it continues on this level. I know that Mele Kyari, the current CEO, as he has been appointed, is quite forthright and he's very transparent about what's going on in the NNPC. So hopefully
Uh,
he stays in office long enough to effect change and to bring this culture of transparency through the entire organization.
Joshua, I keep asking these questions from analysts such as yourself. What do you think President Buhari is looking to achieve? He has just about 2 years or thereabout in office. And here he is, trying to turn the NNPC from his historical status as a parastatal into a limited liability entity, and most likely going to be a PLC before President Buhari, before he leaves office in May 2023. Do you think President Buhari is trying to prevent NNPC from being a cash cow moving forward for incoming administration and subsequent ones?
Well, I mean, that's a bit of a difficult one to really envisage, to understand because we don't have his full thoughts or we don't know exactly what's going on in their thought process at the moment. But I would say that it is the right thing, the right policy going forward, simply due to the fact that the NNPC, as it has been up until this point, has not been working, at its full potential. It has not been providing maximum value for the Nigerian economy. That is the truth. And you could say that, President Buhari is a big admirer of Saudi Arabia, of other Arab states. And if you look at the biggest and most successful, state oil firm, Saudi Aramco, you see that they operate on a completely different level to us. So perhaps just looking to, countries that he admires, he has seen that this is one of the things that they have put in practice that works for them. And so he wants to copy that.
Mm.
And I have no problem with that when it comes to copying
I,
things. around that.
I agree with you. I think I tend to agree with you. If it works very well with Saudi Aramco, it may as well work well with the NNPC on that particular front. I think everyone seems to be on the same page when it comes to fine-tuning NNPC and turning it into a limited liability. At least get good corporate governance into its operations. That will make things a whole lot easier moving forward. Faith, give me a few about a minute on the or less on the Abuki FX stopping the FX updates on his website following last week riot act that the central bank read out.
Yeah, thank you so much. I feel that it's worthy of note that uh, the CBN coming after Aboki FX is not absolutely a new thing. The CBN has been before now showing some displeasures over the activities of people who kind of promotes things or who kind of promotes the black market of the Nigerian naira. So the CBN coming after Aboki FX, which is a platform that many Nigerians see as a place to get updates on the naira and how it's trading in the black market, Nigerians and those in diaspora. So CBN coming after the platform was um, something that many people saw as not placing enough, although people who understand the currency are saying that, well, it's a very, very good move at this time and it's the best for the economy, especially that the CBN was saying that the Aboki FX, that platform, AbokiFX.com, was putting up things that are not good enough for the naira, which are kind of making the naira lose the value even more. So we're waiting to see how all of this ends, and it's good enough. It's interesting for me to see that Boki FX actually stopped that update, which I feel it really doesn't have a choice but to stop in the real sense of it. But then he has stopped it, and we are waiting to see how it all goes. He actually, the owner of the platform, actually said that he's seeing that going forward this week we are into that he's seeing that the naira appreciates. Well, everybody hopes so that that action of putting down updates on the platform on how the naira is doing in the black market will help people to kind of shift a little bit of attention away from the black market and be more interested in what's happening in the I&E window of the naira.
Thank you, Faith, bringing us up to speed what you're hearing on the ground. Very quickly, through your weight into this, your voice into this, Joshua.
Well, as Faith already said, the truth is the CBN, how I'll put it is this. It's obvious that the CBN governor has been given a mandate to arrest the slide of the naira against the dollar. Unfortunately, Abuki FX is like a big, neon sign with a reminder that this, the CBN governor is failing in this mandate. Because every day, especially in the most recent weeks, we saw that on a steady hourly or 3 times a day as they post, the rate was going up and kept going up. It reached 570 was the last rate that they posted before they said that they would temporarily halt the posting of the exchange rate. So obviously we're climbing towards 600, and I think the CBN governor will do everything to, you know, at least stop the perception that that is the point it has reached. Because Aboki FX was so reliable that international players were also using it, to quote prices. So that tells you that everybody's eyes are on this website, and obviously that's a very bad look for the CBN governor because he has banned sale of exchange of foreign exchange to BDCs. He has given banks more dollars apparently, as encouraged people who have legitimate need for these funds to come forward. But at the same time, they still put out all these circulars saying that people are using underhanded tactics to gather as much foreign exchange from the banks as possible. But the truth is, the more regulations and rules you put in place, the more you bring out or you encourage people to flout those rules or to find loopholes. If we had a liberal market, if foreign exchange was freely available on a floating exchange basis, the truth is, yes, our exchange rates would get worse, but only temporarily. As long as people find that it is easy to get foreign exchange, you don't have to bring in applications, you don't have to buy tickets, you don't have to do all these things, jump through hoops to get it. You can just walk somewhere and buy it, and people are able to trade freely, and the exchange rate is based on demand and supply. The truth is, foreign players will come back into the country. They will leave the CBN queues that they are currently on, and they will get into the INE window. If the INE window was free and open and the CBN was not holding the price down artificially, the truth is that market would grow. Then you'd see volumes return back to the country, and then we'd be able to slowly moderate the exchange rates. But the problem with that is that even if we do that, it will only go in one direction just due to the fact that productivity is not high enough. We're not exporting as much as we're importing. Therefore, the deficit will always be in the dollar's favor, and we will continue to see depreciation. And on top of that, inflation will also worsen the value of our currency. So all of these factors together are what the CBN should be focusing on. But unfortunately, they're busy chasing shadows, because the truth is, stopping Aboki FX will only create 10 more Aboki FXs by the end of this week. And soon enough, the dollar will be at 600 naira. So what have they achieved?
Okay, let's see. Let's see how things. Let's see how things pace out, because this conversation, as you put part of your comment, Joshua, there's a wider. I mean, there's a wider picture here which we need to focus on. And you talk about productivity and exports. If you don't have it, you can't give what you don't have. So if you don't have FX, you don't have FX. And if there is a very small amount of FX, everybody will want to swamp on that. So I think the conversation is around how do we increase our productivity. Even in naira, even naira revenue locally, we all know is very, very short. So not to talk about the FX, not to talk about currencies, but foreign currencies, by the way, our revenue is subliminal. We know that on the naira side, in terms of revenue generation. In terms of the dollar generation, that is even worse. So on both local and foreign currency level, at both levels, we're not generating enough. So that means that whatever we have, there's a big problem here beyond the central bank. And that looks like a very big issue, because the central bank will only manage what is available. But you can do a lot better when your inflow is higher, and then if your supply is can at least balance out with your demand. But from now, it looks like demand is about 1,000%, and inflow is just trickling in. But it's a whole conversation we haven't really fixed on the fiscal side, by the way. But let's see how it all goes moving forward. Thank you, all of you. Let's get into the Southern African space very quickly, and just let the AbokiFX.com issue rest a little bit and see who replaces Aboki FX. The South African Central Bank will hold interest rate most likely today. That's what the consensus looks like. Imperial Logistics shareholder says, yes, we're going to take $12 billion rand from the DP World of Dubai in that buyout of those logistics business in South Africa. That will be the biggest DP World business sub-Saharan Africa outside north of the continent. Bidvest prices inaugural 5-year bond of $800 million at 3.625%. It looks like we're in the season of euro or bond, by the way. And Zimbabwe's financial holdings reporting first half profits down 66.2%, 785 million local currencies. The South Africa's central bank interest rate decision on hold. Are you in line with that, Joshua?
Yes, I think, like we've seen obviously with Nigeria's MPC as well, they didn't move rates. Obviously, now is not the time to make any rash decisions or to move rates in any direction, just because we have to sort of observe the international community, observe what's going on with the ECB and with the Fed, to see where their policy stances are, and to react and see what is favorable for us. So I think the Nigerian, the African economy in general, African economies are going to generally keep rates stable just for now, at least probably till the end of the year, just to see what kind of effect that has on the economy, and to continue to encourage people to try and get out there and spend.
Okay, thank you. There are a whole lot of central bank meetings this week, including the US FOMC. A number of them will still be on the continent, by the way. We'll keep following them from tomorrow and see who decides what and how till the rest of, which will finish off the week, which will be the final full week in the month uh, of September. The next week, we got a few days in, and then we cross into October. Let me look at the North African market very quickly as we sum it up, because the EFDB and Egypt are discussing the 2022-2026 joint strategy. This is quite strategic, with the AFDB in bed with Egypt, with authorities in Cairo to look at this medium-term economic strategy together. Despite the problems in Libya, or since the ouster of Colonel Muammar Gaddafi, Egypt says it has signed 14 MOUs and 6 deals in multiple fields across various economic sectors with the largest landmass economy north of the continent. And Sona Seed, first half in Morocco, says its sales were up nearly 70%, profit of 47 million dirhams in the first 6 months of the year. And Tunisia President Said has okayed the transfer of IMF 552 million special drawing rights allocation. Everybody's got its own share. The IMF is now giving the shares of Tunisia to it, despite talks in Washington that the President Said should allow more political freedom and legislative window in the Tunisian market. Joshua tried to sum this up for us this morning on the North African market with Egypt and Libya. It looks like Egypt is trying to put its boot on the ground, looking at the future of Libya.
Absolutely, and I think when you look at what happened, you mentioned Colonel Gaddafi there. I think it is in their best interest for that region to stabilize as quickly as possible, because there was a very worrying period where ISIS had sort of made Libya the African base camp, and obviously that is very bad news for all the North African countries and even some of the sub-Saharan African countries as well, because if they are allowed to form a base, in a country that was heavily militarized like Libya, they could spread across the continent very quickly. And we've
And
seen
they do
some of
spread
this.
all the way,
And
causing problems down to Nigeria, according to
exactly,
some news. Yes.
exactly. So it is in their best interest, in Egypt's best interest, to sort of change the story, or reverse the hardships of the Libyans, to sort of cut off that pipeline, and also extend their own power, extend it into, like you said, the largest landmass in northern Africa. That gives them the opportunity to control things, to have a say probably in the leadership in that country, and to have a say in the political direction of that country, and bring them into the fold and cut out insurgency
The
in
bad
one fell swoop.
element, yes. Mm,
That's the objective, I believe.
mm, mm, mm. Because I think if Libya if Egypt uses weight, yeah, it has both, like you rightly say, it has political and economic weight, and try to turn things around from this fractionalization among the generals, and then make sure that it goes on an economic front. I think that would keep a lot of works away from the idle workshop of the devil, as it were, that has gripped Libya since 2011, about 10, 11 years down the line.
Absolutely.
It's been quite some time. I think it's time to maybe Egypt will help us there on one hand, and a few other countries will also contribute. But if you sign 14 memorandum of understandings, I think it's a way of getting them to say, look on the economic side of things, leave all this fight and whatever squabbling over the resources. Let's get down to we'll run the country very well, and it's in everybody's interest. Thank you so much, Joshua Davisi, Head of Banking Research and Analysis at Vegeva Capital Management. And we look forward to your conference on Thursday this week, the 23rd, for the West Africa Capital Market Conference. Everyone is encouraged to register online. Go on Vegeva.com, and of course, register and be part of the participants. We'll be there as well as Frontier Africa reporters. Well, thank you, Faith. I'll be to you as well. Thank you all. Bye for now. See you again tomorrow.